Alrighty, everybody. This is gonna kind of be the full video about like my strategy, how I look at trading, etc., etc. It's gonna be pretty good. So no edits, no anything. I'm literally just gonna upload this straight to YouTube. So it's excuse me, kind of get into it. You guys will hear a lot of stuttering and like pauses. But anyways, quick two disclaimers before I get started. Number one, I did not invent any of this stuff. I did not come up with any of this stuff. Whatever you want to say. Not voice crack. None of this is my stuff. That's what I'm trying to say. All right, I didn't come up with it. I didn't think of it. All of this I learned from other people. You can watch their videos, the creators, or other people who make videos. This is just like my way of explaining it, my interpretation. So feel free to go watch all of the other stuff. And the second thing I wanted to say was, this isn't gonna work for everybody. This is not financial advice. This is not, you know, don't take this as anything more than just a guy saying what works for him. This is just what works for me. I like it. It makes sense. A lot of you guys asked me to make this video, so that's what I'm doing. But let's just get right into it other than that. So first things first, the two main things that I'm looking at for trading are what is the daily bias and is this the right time to trade? So let's go over quickly how I find like the daily bias and then we'll kind of get more in depth. So I always start with a high time frame analysis. So we'll start on sometimes I'll even go up to the weekly on like the continuous contract, the weekly or the monthly, but I'll like mess with the settings, right? Sometimes I'll even start as far up as the weekly time frame. Like we'll say, oh, there's a weekly fair value gap. But typically, not always. I'll usually just start on the daily. The daily's fine for me. But you want to look at what are we doing on the high time frame. So, for example, going into last week and the week before, obviously, like I said, we had this weekly fair value gap. These are things that we started stacking. And I said, and I was looking, and I was looking at this point as a possible reversal. It doesn't mean that we went straight long right here trying to catch anything, but it means that our bias was basically if we reject from here, we're likely going to be very bullish for at least a little while, for at least the next few days. Even if we didn't think it was going to reverse completely, even if we're bearish, we're like, hey, for sure we're going to want to at least come up into like right here, right? Like off this fair value gap if we were bearish. So no matter what, going into Tuesday, Wednesday, potentially even Thursday and Friday, you would have been at least a little bit bullish, right? So that's kind of how I start framing it. So we'll look at, like I said, fair value gap. So let's say in the weekly. I'll look at the weekly and I'll say, okay, is there anything else that I really want to see? No, not really. Like this is kind of what we got. I'll look at that above us as well, and I'm like, nothing here. Let's go to the next day, onto the daily time frame. The daily time frame, again, we just literally zoom in continuously. Okay, on the daily, I really liked that we had this fair value gap that we rejected from on Thursday. I'd still be bullish. Like, yes, we're kind of in this little range, and this is why I said that Friday was not going to be a good day to trade this on this day if we didn't move how I said we were going to move, because we're like, okay, we're kind of in this range, but you know what I'm saying? You start playing off and you start realizing, okay, some days are going to be really good, some days are going to be really bad. After like Monday will close, you can start saying, okay, well, we're respecting this is more of an inverse fair value gap, and you can start being bullish again. Or if we had closed below it, you can start saying, okay, now we're more bearish again. And that's how you guys frame your daily bias. So let's look at where we are right now. If I was trading right now, looking at this right now, I would be like, okay, we're still very bullish. We have been respecting bullish PD arrays like the fair value gap that I mentioned. The sorry, I like deleted them all. The weekly, like we mentioned, I would again mark out another daily fair value gap. I'd look at this one and say, okay, we have this below us. So yes, I'm bearish, or yes, I'm bullish. Yes, I think we're gonna go higher. And to where? Okay, we have this high right here. We have this high right here. Did we take it? I don't think we did. Yep, just barely missed it. We have this fair value gap up, or this high right here, this one here, etc., right? There's more in the lower time frame. So this is like the daily targets, and then we also have this. So going into the week, I would say, well, if we're gonna continue upwards, which I'll go into more how I pick out what days I think is gonna do certain things, but if we're bearish, like if I think like we're gonna move lower for a retracement, I'm gonna think we're gonna go into this fair value gap, and if I think we're gonna go higher, my targets are right here. Boom. This is like perfectly starting to get into your, like I said, daily bias, into how you think higher time frame PD arrays, all that good stuff. So now we're in the 4 hour here. As you can see, the daily highs that we had marked out, right? All of them are right here. And again, we're going to keep zooming in. Okay, now do we see anything else? Well, we do have this little 4 hour fair value gap, but it's pretty small, so we'll like kind of keep an eye on it as a potential area where we could go into, but not quite uh, too much going on there. And then we could also start looking at, you know, 4 hour and below is where I'll start saying you can look at your market maker models. Like, is this a buy model, a sell model, et cetera, et cetera. Right now, we've just gotten out of this 4 hour buy model we've been having. It was really nice. We had the first stage. This is why I was very bullish going into it as well, because now, like, well, we had the reversal on the weekly and the daily. Now the 4 hour also has a buy model. You guys can start seeing how I start structuring these things. And then once you get more and more specific, you can also say, well, yes, we're in a buy model, but also we're in the consolidation, the second stage reaccumulation. And then now we can, you guys understand what I'm saying? Like, you can start stacking it as you zoom further and further in. But I'm still bullish. I still think we're going to take these highs. I think these are the last couple of highs we're interested in taking. We have some relative equal highs here, here, here. They're all, you see how they're all grouped together, kind of close together. Those are things that I'm very interested in. Those are things that highs I would want us to start targeting. So that's how I kind of frame the daily bias. That's like the general idea is just start on the higher time frames and say, just don't even have to get too specific. Just say, do I think we're moving higher or lower? Don't even do all the whole models, market maker models, etc. Just say, hey, the weekly has a fair value gap and we just went up, or the daily, here, I'll go on the daily has this fair value gap and we rejected off of it. I think I'm going to be bullish bias going into the next day. You don't even have to get into the later stuff in the video that I'm going to explain. You can just do that. That's a solid way of trading. Like, just basically use it until it don't work, right? Like right here. Like we have bearish for value gaps, just go short until it doesn't work anymore, until we have this reversal. Like that is a pretty solid way of trading already. Very simplistic, obviously. You don't get into, there's more advanced stuff you can get into, but just having that daily bias provides a really good frame, and especially helps those of you guys, I know especially this used to be me, who are flip flopping and like going long, then going short, then going long, then going short. If you really struggle with that, I think daily bias is going to help. Yes, you will miss out on some moves or you will lose trades because your bias was wrong. There are days, like for example, on Friday, just this last Friday, I was trying to go short. As you can see, we didn't really move any short. Yes, we had a small move in the morning session, but other than that, it was just consolidation, and we actually went back up. So yes, you will miss out on moves because of your daily bias. But that doesn't necessarily mean that it's a bad thing, right? It's not always a bad thing. And it also helps, right? In a lot of cases, and for me personally, it helps out more, right? So on Tuesday, I had a bullish bias because of what we said before, right? We had the daily respect of the fair value gaps, we had the weekly rejection. Because of that, I was bullish. And on Tuesday, I went for longs, and it worked out really well in the PM session. We had a really nice move up. Wednesday, if you had held it overnight, would have ran really nicely. So you don't have to be super advanced. Just having that frame, and if you're wrong, it doesn't have to be that the trade was wrong or anything was wrong. It could just be, hey, my bias was just wrong for today. And it helps you be able to accept that fact because your bias is not going to be wrong every single day. So just statistically speaking. So it helps kind of clear out all those losers that you guys are starting to stack, like those losing trades that come from just being like, okay, I guess we're not long, I'm going to go short. And it also helps clear out the fact that, like you don't blame everything on one thing. You can just say, hey, my bias was wrong. We're done for today. It's that simple. So that's kind of how I look at daily bias, how I start framing it. And I'll start going into now the more advanced stuff. So let's kind of get right into it, which is ICT, quarterly theory stuff. This is really important. This is how I frame everything. So I think I'm going to start with quarterly theory. I think that makes the most sense. So quarterly theory, very popular strategy. I feel like a lot of people used to trade it. Maybe not as much anymore, but I feel like it used to be fairly popular. Like you guys should know what this is. If you don't, I'll explain it the way I explain it to myself. So I'm going to just draw out these colors here. So quarterly theory is the idea that certain days have certain actions, certain sessions have certain actions, etc., etc. So I'll kind of go into it and then I'll list everything for you guys. So the first quarter of whatever it is should mostly consolidate. It shouldn't really do anything. Every move needs consolidation. There's a lot of names for this as well. I'll list all the names. And then let's say we're in a bullish scenario. Then the second quarter should actually be bearish, a manipulation leg, right? It should actually have moved lower. The third quarter is the distribution phase or the true move of the day or the true move of the week. This would be, if we're, like I said, if we're bullish, it would be like this. And then the fourth quarter is continuation or reversal. So it looked like either a reversal, like we'd move back down, or it could look like a continuation. And it works for both ways, right? You could literally flip this upside down and it'll be the exact same thing, right? Consolidation, but we move up on the second quarter and then down and then continuation reversal. So that's the idea here. And each quarter represents time, right? Obviously, it's time based. So what does that mean? What is Q1? This is quarter one. If you guys just think about it logically, right? What times does the market usually not do anything? And the most obvious one is Asia session, right? Asia session does not really do anything. It kind of just consolidates. Like, yes, we have crazy moves sometimes if Trump's speaking or if a war is going on. But generally speaking, again, this is not like perfect. This is not law. This is not like every time, but it's a good framework to have. Generally speaking, Asia session does consolidate. We don't really do anything. It kind of just moves up and down a little bit. Doesn't really do anything. It is also Monday. Monday also is one of those days that just doesn't really do anything, right? If we kind of look on the chart, generally speaking, on Monday, like this here, on this bottom candle, didn't really do anything. If we go on to a lot of the charts, you just go on Monday, and Monday we just kind of pick one move and we don't really do anything. Like right here, this Monday doesn't do anything. Monday, Tuesday doesn't really do anything. Again, it's not perfect, but it is a good way to frame it. It is also the first week of the month. Doesn't really do anything, right? And it's also, you can apply this to a lot of things, right? It's also the first 3 months of the year. 3 months of the year, which is January to March, right? Doesn't really do anything. So now I'm sure you guys can already piece together what times the rest of the quarters are. So if we kind of label it, I'm just gonna make this nice little graphic for you guys. So Q2, Q3, Q4. There's also London session. There's also Tuesday of the week. It's also the second week of the month. It's also April through June, right? Try to get that there for you guys. It's also, again, Q3. You guys can guess the New York AM session, the first half of New York. It's also Wednesday. It's also the third week of the month, and it's also July, August, September, right? July to September. Wait, July, August, September. Yeah. Sorry, guys, a little slow here. And then the final quarter is the PM session to wrap up the day, Thursday to wrap up the week 4 to wrap up the month, and then October to December to wrap up the year. There's more. There's also 90-minute cycles. There's also micro cycles, but we're not going to go into that today. It's a little bit too much for even me. We're just going to this is the general idea, right? So what does that mean in practice? Okay, we kind of get it, right? Certain times, certain days, we expect certain things, right? Okay, Monday is going to be a slow day. Tuesday, you expect to move lower or higher to manipulate. Wednesday, the real move. Thursday, continuation reversal. And by the way, for those asking, Friday is its own thing. Specifically, it's the TGIF retracement into the weekly range. This is its own thing. Don't worry about Friday. So now, what does this look like in practice? How did I use this in my trading? Here, you guys can look at the chart a little bit. I'm going to kind of delete it for now because that's actually kind of in the way. So how did I use this in the past week? How have I used this lately? I'll tell you guys exactly how I used it. On Tuesday, was it? Perfect. Let's kind of go into here and I'll show you guys like break down the trade just using quarterly theory without any ICC concepts. So going into the week, what did we expect Q1 to do, which was Monday? Accumulate, right? Not really do anything. Yes, we did have a move higher. It was more bullish especially in the earlier morning session, but we also didn't really do anything. We took a high, we kind of took the same high, took the low. You guys understand? So that is the first quarter. Now, if we're bullish, which I was bullish because you guys remember I did my daily bias thing with the whole daily fair value gap, weekly fair value gap. So if we're bullish, do you guys remember, if you guys should know, I just said this, Q2 should be bearish actually going into the rest of the week. Which means, like I said, remember, it goes like this, it goes like this, and then the next day goes like this. So Tuesday, what would I have expected using quarterly theory? A move lower, which we had. And yes, I took a trade off this, and I'll explain how I did in a bit. But we took the low that we made on Monday's low. We formed SMT, where, again, I'm not going to get into that. But we took the low, we made the move lower. Now, what did Wednesday do? I'm sure you guys can already see. You guys see what Wednesday did. Yes, obviously the war affects these things. News affects these things. I'm not saying it's perfect, but you guys get the general idea here. Wednesday was the move higher. You guys gonna see. You guys kind of piecing it together. Oh, this is how he starts to trade. So he looks at his daily bias, and I say, I don't know why I talk in the third person. Ignore that. But basically, look at the third in the higher time frame view. We had the weekly fair value gap we respected, right? So let's go back up to the week. This is how I start framing my trades. Let's go back up to the weekly. Boom, boom. Let's go back down to the daily. Boom, boom, boom. And now we can drop into the 4 hour and the 1 hour. So because my daily bias was bullish, why? We had this reversal, we had this respect, we had this nice move on the daily. Now we can zoom in on the lower time frames, and now we can start applying quarterly theory to the week. So Monday, again, accumulation. We didn't really want to see anything happen. Tuesday, we wanted to see a move lower. Wednesday, we wanted to see the true move higher. And then, obviously, like I said, it's not perfect. The rest of the week was kind of choppy just because of how crazy this move was. So again, you have to use, is what I say, discretion for a lot of these things. Thursday, yes, we want a continuation or reversal. And yes, it did continue to an extent. But this is where more of the discretion comes into play. Like, okay, we had a big move, and it was during Asia session, so we're kind of like avoiding it, that type of stuff. So how would I? That's exactly how I take the trade off it. You could have gone short in the morning, right at 9:30. You would have been biased short until this low was taken. Why this low? I'll get into that later. But you would have been biased short, and then you could have been biased long going into Wednesday and even the Tuesday PM session. So remember, and then I'll show you guys exactly how I took the trade on Tuesday. So that's the daily session cycle. But if you remember, it's not just days of the week, it's also sessions. So now let's zoom in again into Tuesday and break it down session by session. So I'm going to kind of, how do I do this? Make this nothing and then make this box red, right? Perfect. So let's kind of break this down. So remember, this is within the context that, let me go to this middle line. If you remember, this is in the context that this is the move lower, right? So you cannot pinpoint that sessions are going to do certain things. So if we mark out Asia session, let's kind of mark this out for you guys. Boom. This one's going to be white. Okay, let's mark out the session. So this is session 1, 2, 3, 4. Obviously, this one doesn't fit because the market's closed for about an hour, but you guys get the idea. Let's move this a little bit more this way. Perfect. So again, what do the sessions do? They do the exact same thing we just went over. I'll make this one blue, and I'll make this one green. So what did that mean? What did that look like? Oh my God, this is like actually a perfect example. I'm just realizing. So let's look at it. Asia 1. Asia session should consolidate. This is not the best example. It did actually move a little bit, but the general idea is it still went lower. It also went a bit higher. Kind of, you can see a little bit more chop going into London session. And remember, we're biased bearish on this day because this was the day we expect the week to manipulate lower, if you remember. So what does this look like? London session do? It went up. Why? Remember, manipulation leg. London is the manipulation. It moved higher. Oh, this is how we start piecing it together. What did the AM session for New York do? It opened and it did the true move that we expected on Tuesday. It moved lower. You could have traded this and moved lower. I personally did it. It's because it's up to you whether you want to trade the manipulation. You could easily just be a manipulation trader. You only take the opposite of the true move of the day. You can be the only guy that trades this. You can be the guy that trades this. You could be whatever you want to be. I'm just saying, like, this is how I would do it, and I'll show you guys the trade I actually did to end up taking. But again, AM session, the distribution phase. Why is it distributing lower? Because Tuesday is the manipulation. Like, you stack it up. Tuesday should move lower. At what time do we want Tuesday to move lower? In quarter 3, because that's the true move of the day. So when does it happen? In quarter 3, the New York AM session. Oh, and then now I took the trade off the 4th session, which is continuation or reversal. Now, we have to keep in mind the context here. Do we think this is going to continue lower in the 4th quarter if this is only supposed to be a manipulation leg in general? So the question here is basically, if I'm taking this trade off this idea that we're doing this and then this, and I'm in this area right here, do I think that this is actually going to continue lower, or do I think this is just going to reverse and we're actually going to get a reversal? Obviously, within context, it's going to be a reversal, and that's what I was looking for going into the PM session. And as you can see, that's exactly what happened. It did a reversal going into the PM session, moved up, and then it made the final move up till end of close, and that's what I did. I took a long, and I can get more in depth now with ICT concepts, but for now, I'll just leave that at that. I never realized how good of a day this was to use as an explanation, but let me take a deep breath. I'm talking too fast. Hold up. Sit with that for a second. That was good. That was a good explanation. But and all days are like this. All the days are like this. Like, well, not all the. Okay, let me rephrase that. All my good trades that I take are framed off this belief. Is every single day going to do this? No, because the next day is a terrible example, right? If we look at Wednesday in the Asia session before Wednesday actually opened, Asia moved like crazy. Look at this. This is ridiculous. This is not at all how we would expect Asia to move using quarterly theory. So it's all within context. If you wake up on Wednesday and you see Asia did this move, you should not be saying, like Mike Tyson there, you should not be saying, oh, well, even though Asia session didn't consolidate at all whatsoever, I still think the rest of the day is going to play out how it should. No, everything is within context. Context. But this is how I would frame my trades. This is how I kind of look at it when it comes to quarterly theory. And then my entries and models and a few other things are framed around ICT. But quarterly theory is huge. I genuinely use this a lot. You guys can see here how I took the trade. I also take a lot of other trades like this on, was it last week? The week before, I used another very similar idea on Wednesday. I believe so. It was Wednesday. It was basically the idea that, hey, like, we should have the true move on Wednesday lower, and I waited until the PM session because that was like we're gonna get the reversal. You can see during the PM session on Wednesday, I think it was this over here. We can kind of do this. You guys can start seeing. If you want to do like homework, I guess you can start framing quarterly theory days and like seeing what did we actually do on those days. But like here, I can see. Actually, I'm not gonna do too much of an example, but you guys can see, right? Obviously, the AM session went up, but then the PM reversed in the morning, and then the London they didn't really do anything, etc., etc. You guys get the idea. Again, is it gonna be picture perfect? No, this is not technically picture perfect, but the idea is there. We had the Asia high get taken during the manipulation phase, London high, boom, move all the way down. We had a reversal, moved back up. Beautiful, beautiful, beautiful example. That is quarterly theory in a nutshell. You can apply this, like I said, on a lot of different things. Quarter one of the year, you can even go up to the monthly or the weekly or something crazy, and start being like, well, Q1 of the year didn't really do anything, right? So from January to March, if you look at January, it went down, but then literally the last week it went right back up. It didn't really do anything. Q2, you can expect whatever you want to expect. But that is the general idea of quarterly theory. Again, it's not perfect. It is affect like the war in Iran, for example, changes things. Whatever these things change, it's not perfect, but it is kind of what I use to frame my help. Also frames my daily bias, right? Let me explain that real quick. So it also helps frame daily bias. So if you guys remember, let's go to the 4 hour here. This buy model, this reversal. When were we gonna expect the move lower on this move here or the move here or this here? Is when you can use quarterly theory. You can expect, okay, Monday didn't really do anything. Tuesday should have a move lower right here. Boom, right when Tuesday mark. I know it says Monday, but this is Tuesday. Asia session. Boom. Oh, we just took the low. Oh, we just like, okay, now we're going to see the true move reversal into the rest of the day, etc., etc. Wednesday, exact same thing. Wednesday should be the distribution phase of the week. Boom. We had the reversal during the PM session, so we distributed higher, perfect on Wednesday, but then the PM reverses, etc., etc. You can literally do this on a lot of different things, and it works really well. I found it works really well. So that's quarterly theory. Oops, sorry. In a nutshell, kind of the idea there. Now let's get into ICT concepts. If I think of anything else about quarterly theory, if I think of something else, I'll mention it. But now let's get into ICT concepts, which is like another big chunk. That's where I use my entry models. That's where I do a lot of other things. So going into a trade, what are fair value gaps? I'll tell you what I use most of the time. I'll use SMT. I'll also pair SMT specifically with quarterly theory, and I'll go into that in a minute. I use fair value gaps. I use occasionally fibs and standard deviations, not always, but sometimes if it aligns with other things and it makes sense. Obviously, liquidity concepts, the idea of liquidity, huge concept there. And again, that is just what I use. I just use the concepts, guys. Don't come at me and be like, oh, ICT I know, guys, like, I don't care. I just use the concept. Same with quarterly theory. If you're like, oh, the trader I don't even know who made it, and I don't really care. I just care about how it works for me. So, going back into it. So, what do we expect fair value gaps to do? Oh, and inverse fair value gaps. Those are huge. So, fair value gaps, right? If you don't know, is this pattern when you have three candles and there's a middle candle and it has a gap in between. You can say the technical reasoning, I think, is something about like, oh, there's an inefficiency in the market. Da, 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 da. Don't really care. All I care about is the bullish ones should be support and the bearish ones should be resistance for our trades, right? To that extent. And so that's where I also will frame a lot of quarterly theory stuff. So, for example, on Tuesday we expected to move lower. Where are we going to move lower to? Okay, we have this fair value gap, so you wouldn't really want it to move lower than this because then that's going to start displacing in the wrong direction. ICT concepts are going to say, hey, that's actually, more bearish. Now your bias is wrong. And also, we have this liquidity, this low here, right? Quarterly theory doesn't really talk about lows and stuff. It only talks about like the days and timing. So going into this, it'd be like, oh, okay. Well, ICT or quarterly theory says we're going to move lower. What does ICT say? Yes, if we move lower, where are we going to come back up from? We're going to come to this low and we're going to use this fair value gap, and we should close above it if it's truly bullish, which it does, or at least above the halfway point. Perfect. Okay, now we're kind of piecing it together. What other concepts do I use? I use SMT, and this one's going to be a huge one for you guys, is that the best times to take a trade is when we had SMT. So if you don't know what SMT is, watch my video on it on TikTok. But basically, the idea here is, oh my gosh, we didn't take the low on ES. Perfect. That's exactly what we want to see. Now ICT concepts are aligning with our bias. So now ICT is also saying, the ICT concepts are also saying, yes, not only are we bullish, right, with quarterly theory and such, we're actually now bullish with ICT concepts because we just took this low, made SMT. That is the manipulation of ICT. ICT also talks about manipulation legs. They're very similar in concept, actually. But the idea here is basically, oh my gosh, the manipulation phase is happening right now with quarterly theory, the time of the day, and then the price action is also reflecting that because now we have SMT, which if you don't know is a manipulation. It's a sign of manipulation. It's a sign that we're done moving lower, basically. That's when you can start pinpointing exactly when we're going to reverse if we're done moving lower. Because you could have been like, oh, we're bearish. We could continue lower and then reverse even later in the day. But this is when you would know, oh, okay, we're done for today. And there's actually one more thing with SMT specifically, which is called, I think it's called now, they call it sequential SMT, which is not only between lows, it's also between quarters. So let me kind of back this one up a little bit. So this is Monday, right? Let's get back to this framing here. Let's go back to Monday and Tuesday. We're just going to use these two for now. I'll make this one, and this one red. Okay, so going into this day, yes, we have SMT between the two, but you've also noticed it's between Monday's low, quarter one, you could say, Q1. Oh, that's the two. That's funny. Q1 and Q2. So now you could say there's SMT between the lows, price action, yes, but there's also SMT between the quarters, between Q1 and Q2. And I have to sneeze 1 second. No, I don't. Yes, I do. No, I don't. Oh gosh. It's like stuck in my nose. Okay, no, I don't. Anyways, so you could say that this is SMT between the lows, but also between days, between times. Oh, it's starting to piece it together, how you can mix these two together. So now we have SMT between days, between quarters. That is called sequential SMT, SSMT, whatever you want to call it. I do not care. SSMT. Now this is like everything is aligning on this because now you can say, okay, ICT, we have the fair value gap, we have the low, we have the sequential SMT, which is both, quarterly theory and ICT mixed together. Now we have everything going in our direction. That is how I take the best trades, and I'll even go into it further. So ICT also goes into how important time is, right? If you watch any of the stuff, you also know that time is important. So yes, we know in the PM session that we have a reversal, right? Let's say. So if we go into the PM session, starts at 12. Where is it? Oh, I missed it. There you go. So 12 to the rest of the day, right? Now this is where you guys are going to start seeing 90-minute cycles. You guys are going to start seeing a bunch of crazy stuff. But now this is the whole PM session. Okay, how do we know when in the PM session we're gonna do it. Boom, 90-minute cycles. This is where, and I think ICT actually himself directly talks about 90-minute cycles, but don't quote me on that. Oh my gosh, this guy just cuts everything into fours. Yes, I do. That's all I do. Cut everything into fourths. Okay. Like this, right? So now you guys are going to start seeing, oh my gosh, it is literally all fractal. Price is fractal. That is the number one concept I'm trying to teach, is that price is indeed fractal. It moves on the same thing at the same time on every time frame. So now, if we go through Tuesday, let's draw everything out. So this is why I don't like a lot of drawings on my chart, because you guys are gonna see how crazy it gets if you actually try to draw everything out in the sense. So let's draw out the week and how this trade worked out. It's kind of funny actually. Okay, this is Monday. For Tuesday, I'll try to do a red box again, because if not, it's gonna be too crazy. Boom. Okay, so this is the daily. The red box is gonna be the daily. Remember this, daily. This is the daily. Now we had the sessions. You guys remember? Session from Asia here. This one I want to make this one. Okay. I know there's a lot going on, but I promise it makes sense if you start piecing it together. And then for the last session, I'm gonna also do this box in. Let's do like yellow. Oops, that's not what do this and then do this. Okay. So now you guys are starting to see literally so much crazy stuff here. So let's break it down one more time. So yes, we had Monday accumulation, and then Tuesday we had the move lower, and then within Tuesday we had another 4 quarters. We cut up Tuesday into 4 more quarters. 1, 2, 3, 4. Asia, London. Here, I'll just type it all out. Asia, London. And yes, I did actually take this trade literally live with you guys, so don't be like, oh, this is all hindsight. Like, to an extent, obviously everything is hindsight, but I actually did take this live with you guys on TikTok for free, so feel free to check out my TikTok and stuff. But anyways, back into this part. So within Tuesday, so I actually put Tuesday 2 here at the bottom. So Tuesday, make this one right at the bottom. So within Tuesday, we cut up Tuesday into 4 quarters again. Asia, London, New York AM, and New York PM. And then we used ICT concepts to say, hey, we have SMC at the low has been swept, we're within a higher time frame fair value gap. We also had our daily bias saying higher. Why? Because we had the weekly fair value gap below us and the daily again, respect. That's more ICT concepts. So again, that's how we pair both of them together. And all that to say that we're ready for this. Now I'm introducing, I guess I wasn't going to do it, but I guess we'll do the 90-minute cycle. 90-minute cycles, which within each session, New York PM, you guys remember, we once again cut it up into 4 more quarters. So we split it into 90 minutes that go within the session. So let me I know the drawings aren't perfect, guys, but bear with me here. So now we're like, oh, this is how we do it. So actually, let me color this blue because that's how I colored the other one. And this one should be yellow. Okay. So now, once again, within the first 90-minute cycle, Q1, we'll call it Q1, Q2, Q3, and Q4. Again, within the same context, price is fractal. So again, consolidation. Q1, the first hour and a half of the session, did not really do anything. Q2, what did we do? We had the manipulation leg to move lower. Remember, this is within the context that PM should be reversing. We should be bullish. When did we have the true bullish nature of the day? Finally, within Q3 of Q4. I know it sounds like a lot. Within Q2, technically. I know it sounds like a lot, but it is. If you can, like, rewatch this video if you have to. Ask me questions if you have to understand, but this is how I trade. So when did I take the long? Okay, if you guys can guess, you guys know I waited until 3. I waited until 3 p.m. to take the trade because I knew that Q3 of the PM session is when we were going to see the move higher. So literally, all I had to do was wait. Let me go back into the 1 minute. All I had to do was wait, man. All I did was wait until we had a nice close on a candle at 302. I literally just bought after it made an inverse as well, ICT Concepts, whatever. We made SMT again at the lows. I should have waited technically till the SMT had formed once more, but you guys know me. I'm not a perfect trader at all. So literally, this is it. And then you can target any high you want of the day. You can target the full high of the day, which you hit during London. You could have targeted London high. You could have targeted, I think there was Asia high. You could have targeted Asia high. I went for a very chill. Where was my take profit? It was like at this high, and the 9:30 high from the AM session. That's it. That is all I do to trade, guys. It's nothing flashy. It's literally the same thing over and over and over and over again. Zoom in, zoom in, zoom in, zoom in until you are satisfied pretty much. And you could technically even break up this quarter into more cycles, but I'm not going to. That's too much. That's too much. That's too much. All right. I don't actually use anything lower than the 90-minute cycle. Personally speaking. This is as low as I'll go. But that is literally all it takes for a trade. And now this is where I told you guys I paired ICT Concepts with it, right? I paired up the SMT with the quarterly theory to make SSMT. I paired ICT with the daily bias for the fair value gaps, right? Because that's how I got the daily fair value gap. I also had my bias strengthened with ICT Concepts using the market maker model, which told me that we were going to start targeting this high on the 4-hour and also these highs on the daily. I also used ICT Concepts to to figure out when we were going to enter, which was an inverse fair value gap on the 1 minute. So if we go here on the 1 minute, when we inversed, I know it's like super zoomed in. 23 drawings. Holy, bear with me, guys. I know it's a lot. When we inverse this fair value gap, this red one. Let me delete these two temporarily. Right when the quarterly theory said it's time to go, all I needed was ICT to help me confirm it. Boom, we made this inverse at 302. You guys know I was already semi-limit order. Boom, we were in. And that's it. Low, stop at the low. Again, you could have even been more cautious by saying, okay, I'll wait for internal liquidity to be swept if you trade ICT. You could have waited for either SMT or sell side to be swept, which we did actually end up making SMT, I believe, with the Dow Jones and ES. And after you've seen this move up back into the inverse, again, if you use ICT, you would have said, boom. Like, you guys can make this however you want. I entered here, but it's very likely that you guys might have waited and said, oh, once we form SMT, which for, with ICT Concepts is saying the final manipulation leg, again, once we made it here, now everything is super precise, super fire, super good. Now you can wait one more time for another inverse, which we ended up doing now that the manipulation leg within ICT is over. Boom, this candle closed. You don't even have to figure out a fair value gap to enter because we're not even going to move any lower. You would have entered here, market order, put your stop, an even better stop. It's less risk. And you would have done the exact same thing I did, and you would have used ICT Concepts for your target, right? Because quarterly theory tells you when it's going to happen. It doesn't tell you where it's going to go. You would use ICT Concepts to say we should target the daily high or the London high or et cetera, et cetera. You could have held it, and you could have used the quarterly theory to say, well, if Wednesday is going to be bullish even more, I'll hold it overnight, and because Wednesday is not going to retrace, Tuesday is effectively our retracement day, which means you could have held it for Wednesday. And, oh my gosh, this is insane. And again, you could have combined it with more ICT Concepts to say, okay, which high specifically are we targeting for Wednesday? Oh, well, we're targeting the buy model, so we'll target here, or we're targeting the daily buy model, we'll target here, or we're targeting, doesn't even matter. That is exactly how I trade. That is exactly what I do. Broken down for you guys as simply as I could put it, because I'm a yapper. You guys were asking for a really long video of just breaking it down. We're at 40 minutes already, and there's more I could talk about, but nothing's really coming to mind, to be honest. I know most of it was quarterly theory stuff, but that's just because ICT stuff is so documented when it comes to the PD array, so I'll leave you guys with some homework. So for quarterly theory, I taught pretty much everything that I thought was interesting enough to tell. There is more stuff. You feel free to do your research on quarterly theory. Feel free to do your research on it. There is other stuff like SMT between fills of fair value gaps and a bunch of other stuff. But I don't really trade any of that stuff, to be honest. Everything quarterly theory I already taught is exactly how I use it, and that's how I choose to apply it. There's other ways to apply it, but that's how I do it. For ICT concepts, though, I have a shopping list for you guys. These are all the concepts that I use and that I think are important and that I think you should do more research on if you did not find my explanation satisfactory. I know I didn't really go in depth into it, but that's because I feel like low key everybody teaches it better than I do, anyways. So, fair value gaps, you should know exactly what they are, how they work. Inverse fair value gaps, exactly same thing. They're very similar, kind of the same thing. I have a video on inverses too on my TikTok, so go check that out as well. You should also know about the silver bullet times because if they align with the not just silver bullet actually, let me rephrase that to macro times because those line up really really well with quarterly theory concepts of time, right? So macro times, which these are from like 50 on the hour to 10 on the next hour. There's ones that are also like from the 20 to 30 and then et cetera, et cetera. There's macro times are huge. And like I said, they align most perfectly with quarterly theory. And that's exactly, again, if you notice, my trade was between 302, which was between this macro time. So, oh my gosh, more ICT-X quarterly theory stuff. You should also know about SMTs, and then this kind of, again, kind of pairs with the SSMT with quarterly theory. Someone I'm sure has videos on that as well. But I kind of already taught how it works already. So, but again, do more research on this stuff. Is there anything else that I think I don't personally trade? You can also use standard deviations. You could also learn about that. Slash OTE. Those are another really powerful tool you can add onto your list. There's so much, guys. There really even I don't know. There's more than even I don't know that I don't even know. But this is kind of I think I'll leave you guys with this. And just liquidity in general, you should have this one mastered already. But you should know exactly how it works, why it works, etc., etc. So this is your shopping list for today, your homework list for today. If you had any questions about any of this stuff, join my live on TikTok. Check my TikTok out. I'm live. I always answer every single question for free. So if you're like, hey, bro, like I did the homework and I kind of confused on SMT again, like, can you explain it to me? And I'll have, voice crack. Holy voice crack. But I'll be there to answer your guys' questions live, like super fire. I have a Discord as well, completely free. There's no premium model. I don't sell a course. I don't sell a mentorship. This is all I do is just teach everything for free. I literally made this video because one of you guys were in my live, like, hey, like, not one of you guys, multiple of you guys were like, oh, can you make this video like a long form video about a trade you took and how you used all your concepts? And I was like, perfect. Tuesday is a good example. I didn't even know Tuesday was going to be that good of an example, but that's how good it was of a trade, like A+ setup. Anyways, that's your list. That's your homework. If anyone has any questions, feel free to DM me on Discord or on TikTok. Join the Discord, join my TikTok, all that good stuff. And also, one last thing. There is more to my trading than this, but it's more personal stuff that I am going to talk about in a video one of these days. I don't know when. Expect that around. That also kind of helps me more the psychology. So I know you guys wanted a full like 2-hour video of like psychology and stuff, but I decided I'm going to split the video in half and just do the technical stuff and then do the psychology stuff later. And then I'll probably make a follow-up to this technical going into like each individual concepts because I know I kind of just threw everything at you guys. And I'll probably make dedicated videos for everything. So I'll do one video on quarterly theory. I'll do one video on fair value gaps and stuff. One video on liquidity, etc., etc. I gotta milk this for a little bit, okay, guys? Like, I can't do everything in one video. So I will be uploading more videos in the future. The plan is daily uploads. So definitely subscribe. Definitely check it out. Stick around, and I'll do everything again for free. So check it out. I'm actually gonna go live right after this video, so you guys will be able to check it out. So I'll see you guys later. Again, I'm literally just gonna upload it straight to YouTube. So. Thank you, everybody. Sorry for like the stuttering and burps and hiccups and whatever nonsense I be doing. But appreciate you guys. I'll talk to you guys later. Peace out.